Welcome to the Theo video for Tuesday, January 19th, 2016. I'm Jeff White, and today's action kicked off a holiday shortened week. Obviously, we've only got 4 trading sessions this week due to the market having been closed on Monday for the Martin Luther King holiday. And yet we kind of kicked off this week with a little bit more of the same type of action that we've been getting lately. And by that, I mean strength got sold. And if you look here, as I'm recording this, the trading session is underway. We're shortly after noon here Eastern time. But this vertical line right here kind of denotes the start of today's session in terms of the opening bell for stocks. And this is the futures here. But you can see that right off the bat, stocks got sold. They came under pressure right after the market had opened. And, you know, we had been positive for the session. In fact, we gapped up to the tune of a little more than 1% on the day. But as the day unfolded and just kind of started to get underway, we saw stocks come under immediate pressure right after the bell. And, you know, that weakness came in very quickly. And so, you know, we've seen that take place a lot lately. We've seen many gaps get filled on the open. And yet there's something else that I really wanted to point out to you today, which, you know, kind of goes hand in hand with all that weakness that we've seen and that strength getting sold. And that is to observe the relationship here among the indices. So there are leaders and there are followers. And, you know, kind of just let's key in here on these top 4 indices here. Okay, and I've kind of frozen my screen here, but you know, just kind of as the day's, you know, about half done now, I kind of wanted to check in here. I'm going to pause the video here in a minute and kind of follow up with the remainder of the day here in a little bit. But I felt like this was worth pointing out here. You know, the Russell is the more speculative of the indices, right? This is the small caps. This is where you know, you've got lots of companies that really have yet to kind of prove themselves, and so it's kind of the land of speculation. And so when the market starts to move higher, we see money flow quickly into these types of names because they have a tendency to be much more volatile. They can move much faster. But as you see here, the Russell is the only index at the moment that's down on the session. It also was the first to fill the gap this morning. And so, you know, that's a little bit of interest. You know, we've got to take note that small caps oftentimes will lead to the upside. They'll also lead to the downside. So when you see some weakness coming in, like we saw on that futures chart right off the bell, you know that the Russell is kind of an index to pay close attention to. Really, the next one to watch most closely in terms of speculation is going to be the NASDAQ. Now, these are going to be slightly less speculative names, but it does include a ton of growth companies. It's heavy in technology, etc. And we also, you know, at the moment here, the NASDAQ is slightly higher on the day, up about 0.5%. And yet it also filled the gap. It was the second to go negative on the day behind the Russell. So this one went first and this one went second. But then you've got the S&P. And this is kind of the least speculative bunch among the 3 averages that I keep a close eye on here. And, you know, these are kind of the blue chips, as they're called, right? They're the ones that people try to pitch as a little bit more secure. You know, they're kind of the more established firms. You know, you've got more financial weighting here. These are kind of your grandfather stocks. And at the moment, the S&P is up about 0.4%. So, you know, it's holding up a little bit better than the Russell and then the NASDAQ. But you can see here, you know, you've got the weakest of the bunch here and the most speculative. You've got the second weakest among the sort of second most speculative bunch, and then you've got the S&P, which is holding up a little bit better. So, you know, yes, there is some rotation that can take place in the market, and we definitely see differences due to that. But in the case of the market right now, what we have here is a fear-filled market. We've got traders are concerned, and they're kind of in that risk-off mode, and fear is driving things. You know, traders are tentative, they're spooked. Nobody wants to be the first to step out there and put on a lot of exposure to the long side. Okay, lately, people who've done that have been long and wrong. All right, so we'll see how the day unfolds here, and I'll come back here in a little while and kind of update this video. But for the moment, I'm going to pause it, and then we'll check back in a little bit later and kind of see if, you know, the weakness of the speculative stocks ends up dragging the remainder of the market down. But for now, it definitely remains a very good indicator. All right, so I have started kind of the second step of this recording here. It's now after the closing bell by just a couple of minutes. And, ultimately what we saw today was the market gave up the entirety of the morning strength. So if I kind of move this out of the way and we kind of look at the intraday price action, here's the open here, right around 9:30 Eastern. And, we saw some pretty steady selling pressure throughout the day. Ultimately, we headed south right here off the open, and every little bounce that we saw got sold until really the last portion of the day, where we did see really what I view as some short covering ahead of the bell. It's not as if we really rallied hard, because ultimately when you go back and you take a look here at the net changes on the day, S&P up 1 point, Russell down more than 1%, NASDAQ negative on the day as well. It's not as if there was a whole lot of big upside reversal taking place out there, even given a little bit of a decent bounce into the closing bell. I mean, although those discrepancy that we saw earlier in the day among the averages were somewhat small, I mean, they were nonetheless rather significant, because we ended up giving up the entirety of the morning gains and then some, especially at the session lows. I mean, we were down pretty good. So, the market it's just not going to broadcast a direct signal to you about what's going to happen. There's not going to be an airplane flying a banner behind it over your head that's going to tell you what to do. And that's unfortunate, I know, but you have got to be attentive as a trader. You've got to pay attention to things like this. And, some of these more subtle hints that are out there, those are going to emerge in things like the breadth or other market metrics like we discuss here at TheoTrade, or of course these indices and the relationship among them and which ones are on the move and in what fashion. And today's price action was a prime example of that. Rotation, yes, it does happen at times, but generally you're going to find that when you're seeing some differences among the indices, you kind of got to go back to where are we in the bigger picture of things. And lately, we've been in this mode of fear, and we've been in a situation where the moves have been more emotional, okay? And rotation generally is going to happen when you're not in that emotional type of environment, where things are not quite as extreme as they've been lately. Things aren't moving in such a volatile fashion as we've had lately. So that's definitely a big part of it. I mean, today we saw the NASDAQ gap by 1.3%, and it finished off its worst level of the day and still was negative for the session. So when you see the NASDAQ give up that type of a gain and under the course of less than 2 hours, it's generally not going to be rotation. It's an emotional type of move, and rotation tends to happen more on those slow churn type of days with kind of the narrower trading ranges, where it looks like a whole lot less is happening on the surface than these 1% plus moves being given back in such a short period of time. It's not going to happen generally on days like today, where we gap real big and then fall apart right on the open. But as I noted earlier in the video, the mood of the market, kind of the environment that we find ourselves in, look, it's right here in front of you. I mean, you can see it. We're just still working our way toward lower levels in search of support. This is still an environment of fear and worry. And so when you see the first index to go negative on the day is the Russell, the more speculative names in the market, that's at best generally going to be telling you there's a pretty limited appetite for risk out there. And when you see that the NASDAQ is quickly following the Russell in terms of giving up strength and filling another one of those positive morning gaps, then you know that cash is flowing out of stocks once again, and it's another indication that if you're not short, then you'd better be sidelined as kind of the next best alternative, because the long side is still the wrong side until more evidence surfaces that we've found some sort of support here, that we've seen a change of character to the upside, and we start to see a little bit of follow through, because that's something that we haven't seen. We've seen a couple of little lifts here, but they've been given back the very next day in both cases of late. And so we need to see some willingness of traders to put on risk and accumulate rather than distribute shares the way that we keep seeing day after day almost. All right, so watch the indices, watch your levels, of course, and the price action, but do not overlook the relationship among these averages and what's taking place, because there are some hints available on a pretty regular basis as to what's unfolding beneath the surface. And professional traders, stay aware of that and make adjustments to their plan accordingly. All right. Thanks a lot for stopping by TheoTrade. We'll see you in the chat room on Wednesday.